Okay, so I'm not going to get in great detail about phase one because there's already videos about that, right? So there's 6 main ways to trade EPIC's charting that I've shown so far. And the 6 ways are, there's the clusters, the resistance clusters, and Bernard, by the way, the support clusters, there just aren't any right now in this zone. It is possible, but they aren't here. So that's resistance clusters is number 1 predictable way. The second most predictable way is the wide trading algorithmic model ranges, and you'd have to go back into the reports and videos to understand what those are, but they're very predictable. The third way is the channels, and we have a channel decision up right here. So that's the up channel, and this is the down channel decision. This is the lower base wall support of the up channel. This is the upper resistance of the down channel. This is the mid channel right here, that white dotted line. That's the mid of the down channel. This is the mid right here of the up channel. Okay, so that's the third way, is the channels. The fourth way are the quadrants. It might not necessarily be the fourth way, but it is a way, and that is represented on the chart. The quadrants are, now these, you gotta, kind of get rid of the green ones, the green geometry on this chart. Don't pay attention to it for a minute. I know that's not easy, but so what I mean by quadrants, so this is a 30-minute chart. There's a quadrant right here, so that's this outside line. It goes up, comes down, comes down, comes down. That represents a quadrant on a 30-minute chart. 4 of those make a wider range quadrant, where if you followed it like a baseball diamond, you'd be able to come back to, right, let's find the outside of it. Okay, so there's the outside of it right there. So the lower there, and the middle is right in around here. So that's a broader range quadrant. So lately I've been trading that quadrant. So this represents my trades. There's an entry there, the green. So you see the wall there of the quadrant. So that represents an entry there, green. This represents an entry there, green. This represents an entry there, green, and that represents a close there. Now, I should have closed up here. I wasn't thinking at the time. I was on top of it. I was about to close, but I thought, oh, well, I'm playing for the up channel. But then, you know what? What happened this morning when I closed was I was thinking, it might not go up or down. The right way to play this would have been to exit right there. And I didn't. I should have taken a long right here. So long here, here, and here, and exited there would have been the right way to do it. So why don't I just note that on the chart for you guys, so that you know the mistake, you can study out my mistake. So the fourth way is through the quadrants. So this is where the other entry should have been. So I'm gonna change these to white arrows, because I never actually made that entry, but I'm just trying to show you. So that should have been my third long. And then my exit, there was no reason for me not to catch this exit. My exit should have been right here. And why should I not have caught, why was that so easily caught? Well, there's a fib right there. So that brings me to the 5th different way to trade this. These horizontal lines here are all fibs, support and resistance. The purple ones are not fibs. The purple ones are previous trade support and resistance historically. So they're areas of trade that continually prove to be used as support and resistance. The thicker they are, the more important they are. All the other colors, though, are fibs, except for yellow. And yellow are the same as purple in that they're previous support and resistance from previous trade, but the yellow are specifically very important. In other words, they were very thick purple ones that we made yellow just to simplify things and so that they stood out. And then the sixth way are the targets. So this is an example of a target here. I don't think we hit that one properly. But anyway, that's an example of a target here. Here's today's target. That one hit exact to the middle of price and time for Friday at 1 o'clock. Now that was put in midweek. Normally we'll get the targets in on Sundays. Targets have been really unpredictable lately. The way that oil has traded the last number of weeks, it's been sideways. So yeah, so I'm just going to check and make sure nobody's commented on my mic. Okay. Now, so that's a real quick review of the trading signals, ways to trade this algorithmic model that I've discussed on many videos, and they're in those signals and methods of using the algorithmic model are also in all the EPIC reports. Now, if you, and that's on the website, of course, if you want to trade tighter time frames, so what I did last night was, now you have to be careful with this charting from the perspective that it can be off by 4 to 6 cents kind of thing in any direction, diagonal, horizontal, etc. So, do I think this chart is a little bit off? I think it's a little bit off. These are all hand drawn, so you have to be cautious, right? They're not perfect. Like you see that purple line, you can see how the white line is, it's not straight. These are just hand drawn by a trader, me, that knows how the model works to help me through this trade. That's all I was doing there. And when you understand these, you'll be able to do this on your own, or of course this will be coded for our members. And by the way, one of the things that'll happen through this development process is our members that have a certain membership fee in the beginning, if they don't let that lapse, we're never going to increase that fee. What do we think EPIC is going to cost a month per member when it's done? I'll tell you right now, it'll be a minimum 10 grand a month, minimum. These algorithms, once they're finished and they're coded and they're out in the marketplace, well, first of all, they aren't available readily to the retail market at this level, under this discipline, this type of model. But we know ones in this discipline per user, they're being licensed at $100,000 a month per user into the dark pools and certain hedge funds. So I guess I'm saying that's our give back, if there is a give back that we can give to early adopters and members as we're developing the process. Okay, so let's get specifically to how this is traded. So I think if you look at this chart, you can get an idea of what this is. So, our support and resistance, everything on this chart, every line is support and resistance line, right? So here's the support of that channel. This line here, we consider this like the test line. So, when the trade comes down and it gets into this area, this is like a test area, it comes down and then it crashed there, and they bought up that crash, which was, that intraday crash. I don't know what happened there. That's a little unusual, but anyway, it came out. And what's really important here is that all of this is charted in advance, right? So this is like a GPS. Much different than conventional charting. Now, right now it's coming out of there, but I'd be really cautious whenever you see it come out of a main structure like this, and it looks like it's losing support. I'd be cautious and think about your next really strong fib area and any other supports underneath. You'll find that happens quite often with oil trade because the dark pools, they know where these supports are. They let it drop down and they hit it. And you got to understand, once these algorithms are coded, they can either be used as a high frequency algorithm, where the computers are trading them, or humans are trading it, right, as an intelligently assisted or intelligent assistant, or IA, if you look it up. We're coding for intelligent assistant. Eventually we are going to, though, have a version that's high frequency that won't be in the marketplace and available to the retail public, but my point is that those machines, those high frequency trading algorithms, they can out trade you all day long. So they know, so it falls through the support on fib. They know when the other machines are buying. And that's the only way this gets saved. So that buy that happened there, that ain't the public buying that. That's machines. Now, if you look at where, see, the problem when you get into the really tight time frames is looking back on this chart after the fact, like right now, and looking at the way oil traded, it doesn't do it justice. You have to watch it live. Because if you watch this live, and the way it trades through all of this, you're going to see a totally different picture. I mean, this gives you a bit of a picture, but when you see it live, you see things that you're not going to see on the chart after the fact, if that makes sense. So when you see it live, you see all the ups and downs in between here, and how that works, right? And all the tails and everything. But look at where it got bought up. You see this line right here? Now, on these intraday quadrants, these guys right here, these midlines are very critical. So whenever you see oil falling out or going up, look over to that midline to the intraday. Now, if I had charted it all in here, you would see it. You would see it there too. But anyway, you look over to that midline. These midlines are absolutely fundamentally critical. Now, let me give you another example. You see where oil comes off really hard here? Look at where it stopped, right at that midline. See when the oil's popping up here, it popped over the midline and then it bounced between it. Popped out here, got up into here, popped, and look, there's the apex for this quadrant. Now there's two little ones in here. You just can't see them, they're not drawn in. But I went right through the apex of this quadrant. You see that? When it came back down here, right through the inverse apex. But those midlines, they're really, like here, you'll see the midlines here. Gets up just over the midline, fails. Gets up, hits the outside of the quadrant, fails. Midline, but you see these a lot better when you're watching it live inside of these quadrants. Midline here, right, resistance. Quadrant wall, resistance. Right here, falls into the quadrant. Look at that, falls out, boom, all the way down to the midline. So you gotta watch it really close to understand how that works. But next week I'm going to be higher frequency trading. In other words, I'm going to be trading these intraday so that you get a feel. Now you can see in my trades how I use them. Now here, I know where that quad is, but that's not what I was doing. I was entering based on the wide, this support for this possible channel going up, right? Now, why did I enter there instead of here? I entered there because that was my second test. You want to try and get a second test. If you can get a second test, great. So that's why I entered here. It hit and then it came back up and I entered as soon as it got above this support. So you want to use your diagonal support and resistance, and if you can, get a secondary indicator to confirm and hit. So that's conventional charting, right? That purple line there. So you gotta think conventional and algorithmic modeling. See, this is interesting here. It's failing, but you want to be careful. Don't do anything in here. This is like no man's land. This zone right in here, because there's your fib, right? Once it loses the fib and it confirms, different story, right? Now, what do I mean by confirming? Well, if it falls down here, now sure, you can trade in between if you like, if you want to do it high frequency. But once it loses this fib and it loses this support, algorithmic model support, and this conventional charting fib, once it loses them, let it come down, let it come back up and test here, and then let it fail again and then hit it, right? So that's your second test. That's like here, just the opposite. You don't have to do it that way. It's just the most predictable way. That's why I don't lose oil trades. I mean, I lose the odd one, tiny. If I lose, you know, I do lose, but tiny. Here, where the price came down and that big tank, look at where it came through the quad. Now that's the tell. So you see how conventional support and resistance stopped it, and if you would, you know, if you watched it live, you'd see it. Then it tanked down to the fib. If you've seen it live, it was bouncing, and then it filled the fib right here. Now an algorithmic model trader knows, holy crap, that's right above this apex. So the algorithmic model trader knows it gets down in here and it's going to roll at least to here, if not to move, right? And that's just the way it works. You got to think GPS, right? These are all signals that you have in advance. So now you guys haven't had these intradays in advance because I was focusing on getting people up to, and that was part of my blackout yesterday, right? I've been working for months on videos and documentation to show people how those 6 basic trade signals to use the algorithm work. And you know, when we train hedge fund users, because hedge funds use our algorithmic modeling for their traders, right? And they test them. When we train, well, I'll give you another example. We have 3 techs that have never traded before that are trading this model, that are on shifts, and their performance, never traded before. They know nothing about the stock market. 0. Okay, so that keeps it nice and scientific, right? And you know, they're not allowed to view any documentation, view your information, view any market noise or anything. And this is their performance after 3 months. They know nothing about trading. All they've been given is the 6 indicators, and they were only able to use 2. Now they've been equipped to use all 6, and they're going to be equipped for intraday. So if they can take an account from 100,000 to 149,000 and they know nothing, see, that's why I had a little flip out yesterday. Part of the reason. There, you got a second excuse. Look at that. See, you got to be careful. They're buying. But here's the time cycle completion. So that's Sunday night, right? So, you know, if it gets up in here, you want to be cautious, but up over, you know, up over 43.22, and that's why I put out that notice earlier, right? Because your time cycle decision is right here at 43.04. Why did Kurt exit right here? Well, look at it, was testing 43.04. That's the price of the time cycle decision. That's what caused me to do it, right? So there should be no question why, you know, why. I don't mind you asking me the question because it's in the, you know, it's a reasonable question. I'm just saying there should be no question though if you're actually doing your homework. That specific question, and that I didn't even mind, right? Because it's an intelligent, it's somebody that's engaged, somebody that's actually, you know, stepping up with me and working on it, right? And that I get, but and you know, here I go again. I'm just explaining yesterday again, but you know, if you use me as your you know, rub my belly as the Buddha and out, you know, put in a quarter and out comes a trade. This is not the right place. Not this. This you get engaged or you just watch, one of the two. But you know, I'm not your not the you know, I'm not the put in a quarter and out comes a trade. Even in our trading room, even with the beginners in our trading room, we don't like that. So okay, price for the decision 43.04ish. I exited right in here. It was testing the top of this quadrant. It was you know, the decision before that 43.04, and it was testing that area. So that's why I got out. Then I put a notice in the room this morning saying if it gets up over 43.22 or whatever I put, you know, in that range, I said I'll go long. The reason why is because, you know, the first test is at 43.04 because that's where, you know, the decision is on the channel up or the channel down. But what did I do? I went to the next confirmation resistance, right? So that's what I always like to do, is get into the next confirmation, wait for that to confirm, and then hit along. And that's not even fully confirmed until Sunday night, but I thought, well, on an intraday, I might do that. That's the safest way. Sure, I'm going to miss some of the trades. Now, when you're in high frequency mode and you're trading intraday, different story, right? Right now, you could take this trade right here. So I'll give you an example. So on the intraday, let's blow this up. Now, if you're going to trade with EPIC on the intraday, you want to get a TradingView membership, because you're going to want to be able to fool around with this modeling, because you're going to see, little anomalies. We're going to be like, you know what, they're off by a few cents. You see here, so 43.08, this model's probably about a penny off. Anyway, you'll get to know, you'll see how it works. It's pretty close though. It might be a half penny, a penny off on that diagonal. But there's other reasons you're going to want it. So you see where trade is right now? It's testing this. So this is intraday, so you got to think tighter frame, right? So you're going to see things fail a lot more than you will on the larger frame. The tighter the frame, the tighter the focus, the more you're going to see things. The more you're going to see these support and resistance get, trade go through them, because it's not as predictable, because more money pool is on the wider time frames, and that's why we use the 30-minute chart like we do. But anyway, if as a day trade right now, so if I'm here in a day trade, I would have hit long as soon as it recovered here and it got back up over this, you would hit that long, and you would stay long until this test here. So that's 42.94 as an exit, and I'm speaking FX, USOIL, WTI. You got to do the conversion. Enter at 42.87, exit at 42.94. The problem with in the quadrant, when you get that close to either the apex, inverse apex, the left or the right side of the quad, you're not getting much room. Well, you're getting the most room right here. Sorry, you're getting the least room over here, right in between. And then once it gets up over top, then you would go long. The problem is, you got to get pretty good at understanding what's going to take it to the. See here, this candle, how perfectly it hit the top. It got through, hit the top, came back. Now, what's happening there is you got the midline I was telling you about too, right? And then you got conventional support and resistance, that purple line. So it's it's fighting with that. And so whenever you see a conventional support resistance, so up here, so trade gets up through here, might not be the best, the best intraday quadrant to take a trade in, because that resistance is in it, that natural resistance. But this kind of shows you too, right? You get up into the quad, you get up into there, where would I hit this? I would definitely hit this one here. Well, I did hit it there, and I'd keep hitting it. If I was trading intraday, I'd keep adding it here every time, and add right here, and exit here, and add here, and see it hit the midline. So I'd have to exit. So it's pretty high frequency, right? Because the most you get on these is, say this one for example, 42.77 to 43.05, right? So you're getting 30-some cents right at the middle. But you have to understand that's normally where your volatility is going to be. But if you can get that trade here at the bottom, there's a very good chance you're going to get up through here. If you can catch it at the inverse apex and it doesn't fail, there's a very good chance. This normally won't happen, this scenario here. That's very unusual. I don't know what happened there. I don't understand that. I don't know if that was a fat finger Somebody freaked out the markets if there was some news, but that's an anomaly. That's not normal. Okay, so are there any questions for me about how to do this? Now, next week I'm going to be trading in here high frequency style, right? Anywhere from no trades to 15 trades a day. I'll probably average 5 or 6 trades a day on the intraday. So I'm going to be explaining this all next week in great detail. But if you have any questions right now about oil trade, I'll take them and do what I can to help you out. Pretty quiet in the room. Promise I won't chew your head off. I won't leave my mic on hot mic and start ranting about people. Oh, what a bad day that was. No questions? Matt, did that all make sense? Am I still on mic? $10.4 all made perfect sense. Coleman, yeah. Thanks guys for responding. Okay, well if it made sense, we'll leave it at that. Next week I'll be trading this tons. You guys will be probably doing some intraday trading too yourselves. We're gonna have a decision on the up or down channel. Once we get a decision on the up or down channel, Sunday nights are normally really good. I think last Sunday, if I remember, it didn't do. I can't remember. It had to have made a decision down, and I can't remember exactly. Oh yeah, it was pretty dramatic, wasn't it? Let's take a look at last week, really quick, before we leave. It was dramatic, wasn't it? Oh yeah, that was a huge, huge, huge drop. So, that drop didn't come. The big drop didn't come until Tuesday morning. It came. So this is Wednesday morning is when that other drop came. So Tuesday was the 21st, right? So this drop came on so this is wait a second, why am I confused? This is Tuesday and Wednesday. So wasn't it Sunday? It was, man, why have I got myself so, so it wasn't Sunday last week, the decision. It was the week before. Last week it was Wednesday at 10:30. Let's look at the week before really quick. See, I'm on all these charts and I don't even know that. So here's the week before. So this is a Friday. So that's the Sunday. So it actually got into the sideways motion after the Sunday. Then it failed. So the Friday was the 16th. So it wasn't until the 19th that it failed. So that puts it at what? 17, 18, 19. No. You see here. Yeah, that was Friday at 1 o'clock. This is the Tuesday. What? Okay, this is the 16th. That's why I'm confused. So 16. So 17 Saturday, 18 Sunday. Monday, at 11:30 in the morning, it failed. So it was, not the Sunday night session, but it was the Monday. It failed. And then it really tanked here. So that was on the Tuesday at 5:30 in the morning. But it tried to get up into here. Anyway, I think you get the point, right? Those time cycle decisions are important. Doesn't mean they're going to tank right at that time, but it certainly did. I think it was a week before it tanked right at the time cycle. I'm pretty sure 3 weeks back it tanked, like literally right at the time cycle decision. If you're wondering how we figured this out, it's just math. And I've explained it many times before. I'll just tell you really quick. 10 different time frames, 53 different indicators, 60 months back, 33,223 calculations, and you figure out these geometric shapes. And if you're wondering why they're important or how it's all like this, you just go to our website and look at some of the articles that we've done on it. Or you can go to EPIC's feed, you'll find things there. So this is interesting. See, on the intraday, this time cycle is completing right now. Sorry, I'm rambling here, but I'll just show you really quick. See that? See, that's going to pop or drop. If that completes at latest 4 o'clock today, I mean, it's getting really close. So then people ask me, well, Kurt, if that's ending soon, is oil going to go up or down? I never know if it's going up or down. It's all decision to decision. You can see how this is all hand drawn, right? So you got to be careful with exact amounts. Okay, I think that is a good place to end it. Let me see if I have any questions here. So next week we should either start at the top of down channel or bottom of up. A lot of potential. Well, there's tons. This is where the money's made, right? Well, the money's made at the clusters, first of all, biggest money. But these decisions of up channel and channel are fantastic. I personally am biased completely to the up channel just simply because I think it's oversold. Do I think oil is going to do well, going into 2018? No. I think we're going to be between 26 to, maybe at best 53, and our midline for this year was $43 in the algorithmic model. Next year, I don't know what it is, but I would guess it's probably going to be in the 34 to 36 range as a mid price, something like that. This year it was 43, I think, 43, 34, I think. I'll have to look that up. But yeah, see, look at the pressure it's under right now. Like, it's getting aggressive. You can tell by velocity of trade too, right? When the machines really kick in. Whoops, it's a little tight. It's a little aggressive. Let's just do this one more time here. The thing is, when we're dealing with our commercial clients, or the traders that I trade with, or people starting in our dark pool and stuff, we can, we yell and scream at each other all the time. I guess my point is once you get to this level of trade that we're going to in oil, it gets pretty, interpersonal. It's a team, right? Because you have to start trading together as a team. That's interesting. If that pops out of there, your resistance area is here, that purple line. Yeah, it's a tough place to trade. I'm not trading right now. But okay, so I think that's a good place to leave it. I definitely want to rewatch this. When should the recording be up on YouTube? I'm hoping it worked, Henry. I'm trying a new recording system because my upload time here is so challenged. I suspect, let's see here. So, but I'm going to do a series. I'm going to be doing these literally every day next week. I'll be recording and posting every day. Webinars on how to do this. And then we have more. Like, this isn't the end of the the model story. Like our modeling is way ahead of what we show the public, or our members, because we're trying to bring our members with us. But let me just, I would expect I just hit this to stop the recording, right, and save it. Let's take a guess. Sartaj is traveling, so, and you know what, if this doesn't work, all next week I'll be doing it. Stop recording. Are you sure you want to stop recording? Well, I would guess